Welcome back to another episode. Today we're going to take a closer look at Nvidia. We did get some interesting news over the weekend, some good, some bad, and some really good. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first thing I want to take a closer look at are these reports that Nvidia slashes their H100 AI GPU pricing in China to compete with domestic alternatives from Huawei. So for those that are not familiar, Nvidia creates amazing AI chips. But because of things like national security, Nvidia can't send their strongest AI chips to China. They've actually been restricted. So Nvidia, in response, has made weaker chips to still attempt to have some market in the Chinese region. Unfortunately, these weaker chips are competitive in performance to the domestic alternatives. And that's kind of creating a lot of pressure for Nvidia in forms of the Chinese market. So we do have this quote from their overall recent earnings. They mentioned that right now they ramp new product designs specifically for China that don't require export control licenses. That's the H20 that we saw. Their data center in revenue is down significantly from levels prior to the imposition of the new export control restrictions in October. I kind of mentioned this earlier on. And they expect the market in China to remain very competitive going forward. So I think this, right now, in forms of market, the Chinese market is almost non-existent for Nvidia. Luckily, the demand for AI chips is so high that at the moment they don't really need that market from China. We don't know how long that's going to last, right? I believe for at least the next year, it does seem like there's so much demand for all types of AI chips that it's okay for the Chinese market not to be there, right? Just because of the amount of demand. And we've seen that all around. We've seen it during their earnings call that Jensen mentions that, hey, up to next year, they're still supply limited. But there is going to be a time, in my opinion, where the Chinese market is also going to be very important, unless the demand for AI chips continues to grow at such a rapid pace. But I also want to talk a little bit about this competitive pressure here in China. I think there's two phases happening here. First, obviously, the kind of pressure that they can't send their best chip, so they have to reduce the power, the performance of their own chips, and that allows the competitive pressure to be a lot closer in forms of performance. The second thing in China, I want to say it's a lot of politics happening, and obviously China's not liking this rule where you can't send the top AI chips to China. So China and the governments, what we're seeing right now is they're giving a lot of subsidies to companies that buy AI chips from domestic players over there. So I think that's going to be the very competitive pressure here for Nvidia in the long term for China. The only thing that they can do is, if Nvidia's weak down version can accelerate at a faster rate than the domestic area there. Obviously, the domestic chips, the domestic manufacturing companies in China should have some weakness because of all the export controls that we have to send products over there for the manufacturing process. So who knows, maybe in the future, even a weaker down version of Nvidia's AI chip can beat the competitive pressure. But right now, it does seem like China is gonna be non-existent, at least for the next few quarters.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
All right, next I want to take a closer look at some news dealing with HBM3. And for those that are not familiar, HBM3 is a type of memory that goes into these AI chips. And there's only three main players right now that are creating HBM3 that's Samsung, the big company that most of you know, Micron Technology, a US-based company, and SK Hynix. And right now, according to Reuters, it does seem like Nvidia is having some major issues with Samsung HBM3 chips, as Nvidia hasn't managed to kind of finalize the validations of their chips. There are reports that, hey, look, there's having issues with things like power, with things like heat, and this is affecting both HBM3 and HBM3E, which is expected to go into the Blackwell platform. So this is something to keep in mind out, right? Because there's a lot of supply chain issues. There's a lot of reasons that we're seeing supply constraint in Nvidia's chips. And it's important to know that, hey, look, if there might be some weakness in memory companies, maybe that might be another thing that in the future can continue to be more of a supply of a manufacturing pressure for Nvidia. Right now, it's not something that I would worry about, as SK Hynix has been providing so many memories for them, and now we have the addition of Micron Technology. But it would be nice for them to have even more and more people in their supply chain. The other thing I want to say, this is probably more bad news from Samsung. If you are familiar with this company, there's a lot of reports going on that this company is seeing a lot of negativity in a lot of things they're manufacturing. Now we're seeing here in the memory side. In this article, they do mention that Samsung has further made statements that right now claims of failing due to heat and power consumptions are not true, and testing are going as expected. We'll have to probably figure that out later on as we kind of keep in tabs on this. Next, I want to take a closer look at these reports that Scaleway expands to 52 countries and buys 1,000 NVIDIA H100 GPUs. So for those that are not familiar with Scaleway, this is a French cloud server provider. And this is something that Jensen, the CEO of NVIDIA, has mentioned in the past, that right now, it's not only your cloud server providers, but it's also kind of regional cloud server providers that are growing such a rapid pace. So while Scaleway 1,000 NVIDIA H100 GPUs doesn't seem like a big deal, if this company continues to expand and continues to grow, obviously this could be a big customer for NVIDIA in the future. And this is just one example of just that domestic cloud server providers. There's tons of countries and tons of areas that want to develop, and we're probably seeing kind of that in domestic area or kind of region cloud server providers that are growing, and they're probably also buying 1,000 H100s here, 1,000 H200 here, 1,000 Blackwell 100 here. So those little orders of 1,000, 1,000s all around the region is what's allowing NVIDIA to continue to see high demand for its overall product. So I thought that was really good news for NVIDIA, in my opinion. Now, kind of talking back into here with HBM3, maybe I should have been smart and put this previously with my previous article. It does seem like SK Hynix revealed progress for their HBM3E, achieving nearly 80% yield. And while maybe you might not be an investor of SK Hynix or memory companies in general, it's always good news to kind of see that, hey, look, the supplies, the products that are needed to create these these AI chips, their technology is going really well. So I think that's good news and kind of helps us ease that, hey, look, we're not going to see supply chain issues from the memory side anytime soon. Now, the final article I want to take a closer look at is probably my favorite, and this is my opinion, is very bullish for two companies that I own. The first company is for Nvidia. So there are reports that Elon Musk, xAI, and for those that are not familiar with xAI, X.AI is a huge AI company founded by by Elon Musk and other players in the AI market. And this is a company that's trying to bring AI and be the better open AI. For example, they do have Grok on X, which is their large language model. And they talked a lot about in the past how Grok, I think, took about 20,000 H100 GPUs to train Grok 2. And they believe for Grok 3 that they expect this to even take over 100,000 GPUs. So there are reports that Elon Musk xAI plans to build a gigafactory of compute by fall of 2025 using 100,000 NVIDIA H100 GPUs, and might involve a collaboration with Oracle. Now, if you've been following this channel, you know that we haven't really seen a public known GPU cluster that big. Normally, we see them about 24, 22,000. We know Microsoft has a 22 or has a 20,000 around that range. Meta Platform has another one around 24,000 that are used to train Llama, but we've never seen anything in the 100,000 range. And that actually caught my attention during their most recent earnings. And this is why I believe maybe this might not be as false, and I kind of really like this report, because during the earnings call, the CFO mentions that they are right now building some crazy AI factories. Some of them are reaching up to 100,000 GPUs. So the number doesn't seem as far-fetched as maybe if I would have heard about this a week ago, because we have heard from Nvidia's management that they are working with AI factories during that size. Now, for those that are not familiar, Oracle is a huge cloud server provider, and just a few weeks ago, there were reports that there was a $10 billion cloud deal with Musk xAI. So Oracle has clouding solutions, and they work with a lot of big AI companies. Cohere, for example, is an AI company that has worked with Oracle Cloud. In the past, we have seen that xAI is also a customer of Oracle, so it's not necessarily bad. It's not necessarily false that Oracle and xAI have worked together. So maybe in the future of creating this amazing 100,000 H100 GPU platform or supercomputer, they're working with each other pretty well. So this is obviously good news for Oracle if it is true. Oracle is probably one of my favorite cloud server providers right now that I personally believe is completely undervalued. Oracle's PE ratio right now is 32, but PE ratio forward is 22, and forward 1 year is 19.71, opposed to maybe if you look at other companies like a Microsoft, for example, who also has a clouding solution, those are in the high 30s. So I personally believe Oracle is one investors should keep a closer eye out. And if Elon Musk is working on some high compute power, they're most likely working with Oracle, as xAI and Oracle have some great partnerships. So overall, I'm super bullish, obviously, in Nvidia. This is obviously with stock price, I mean, $2.6 trillion market cap. While Nvidia looks cheap, right? If we look at Nvidia's PE ratio right now for forward is sitting at 39, and for 1 year is sitting at 30.48. It looks kind of cheap. We are in uncharted territory right now with the market cap this big to some extent, with the AI market still in early innings. So for me, Nvidia will still be more of a small dollar cost average unless we get some crazy buying opportunity. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.